Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull-bear point and figure market breadth summary chart for July 16th, 2017. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 1.35 rose from 1.29 last week and continues within bullish territory. The total count of securities in bullish or bearish patterns decreased fractionally to 2,825. The count of bearish stocks decreased 3%, while the count of stocks in bullish patterns increased 2%. The Pirls P&F Market Breadth Summary Chart shows us a market now 7 weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Pirls Stock Market Commentary via email free of charge, simply enter your email address in the space provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 26 points for the 8th advance in 12 weeks. At a positive 165.05 points, it continues below all 7 tops above plus 100, and it continues above all 4 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 3 accumulation days and 1 distribution day. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum. The CCI 20 daily is now at a positive 151.22, up from a negative 67.41 last week. At Wednesday 7/5 close, the CCI 20 daily had 6 consecutive days below zero for a change in Woody's trend to down. At Tuesday 7/11 close, the CCI 20 went back above zero and now has 4 consecutive days there for a very possible change of trend back to Woody's up at next Tuesday 7/18 close. We wait for the CCI 20 daily to return to the plus or minus 50 range for another potential zero line reject entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 63 weeks ago, while the daily CCI 20 began a Woody's downtrend 1 week ago. The CCI 20 weekly has risen to 99.51 from 52.95 last week. We await the return of the CCI 20 weekly to the plus or minus 50 range for another CCI 20 weekly simulated trade. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and only 2 of the bottom 5 are negative. Summary: some tech on top, gold and silver and REITs on the bottom. Bullish: semis, computer hardware has left the bottom 5. Computer hardware and comp tech have entered the top 5. Disk drives have left the bottom 5. Bearish REITs have entered the bottom 5. Gold and silver continues in the top 5. KBW Bank and brokers have left the top 5. Focus this week from www.zerohedge.com. Bitcoin, Ethereum plunge accelerates as scaling deadline looms. The following are some key points. Yesterday it was Bitcoin. Today it is Ethereum that is taking the brunt of selling pressure, down 20%. But the dumping of virtual currencies is evident across the entire crypto space, with the biggest market cap coins tumbling to 2-month lows. Once again, it is the so-called civil war that is weighing on the entire virtual currency space, as we noted previously. Behind the conflict is an ideological split about Bitcoin's rightful identity. Bitcoin traded as low as $1,830 early this morning to 2-month lows. As one veteran of the cryptocurrency trading space told us, shit's getting real. No one is sure what happens after August 1st, so traders are taking profits, squaring positions into the scaling deadline. But Ethereum is getting battered today, down 20% overnight to 2-month lows. As a reminder, below is an outline of the main events that could unify or divide Bitcoin. By July 21st, SegWit 2x software is released and supporters begin using it. July 21st to July 31st. The community monitors how many miners deploy SegWit 2x. If more than 80% deploy it consistently, that should signal community-wide adoption of SegWit and the avoidance of a split, at least for now. But if a majority do not deploy, expect anxiety within the community to grow as the focus shifts to the August 1st deadline. August 1st, UASF is deployed by its supporters who begin checking if Bitcoin transactions are compliant with SegWit. If a majority of miners still do not deploy SegWit 2x or otherwise accept SegWit, and if UASF supporters do not back down, then 2 versions of Bitcoin's blockchain could come into existence. A UASF-backed one where only SegWit transactions are recognized, and another where all trades, SegWit and non-SegWit, are recognized. If a split occurs, Bitcoin will likely begin existing on both blockchains in parallel, resulting in 2 versions of the cryptocurrency. Expect traders to quickly reprice the value of both, likely leading to massive volatility. It's moderates versus extremists, said Atlanta-based Stephen Pear, Chief Executive Officer of BitPay, one of the world's largest Bitcoin wallets. Quote, "It depends on how much a person values the majority of people staying on one chain, at least for a little while longer, versus splitting and allowing each pursuing their own vision for scaling." End quote. Thank you for watching this week's Sand to Pearls Stock Market Commentary video featuring the proprietary bull-bear point and figure market breadth summary chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.